another FB live session, and this is going to be short, sweet, and crisp. And today's topic is actually quite an important topic, especially if you are new in options trading, or even if you are someone who has been trading option for a while but didn't know exactly what's going wrong, what are the things you need to follow along to make sure that you are a profitable option trader. So I'm going to share some interesting insights about how to trade options and what do you need to do. But before we do that, if you are joining FB Live from wherever it may be, just say hello, say hello to other OP community members, say hi, spread the positivity, talk about where you're joining from, and hi, this is Manoj, and I will be having some screens next to me so I can read your comments. If you like something, write into the comments as well. If you find any aha moment, mention that into the comments as well, and let's make it more and more interactive. As we finish this session, we will also go through the Q&A, so you are more than welcome to ask any questions that you may have. I see Manfred saying hi, I see Nilesh hi, I see Sia, hi Sia, I see Veera as well, good Veera, I see that. Kamal I see, very good, hello Kamal, and I hope everyone is staying safe and sound. So let's go through it. Why do option traders lose money, or why do especially the new traders lose money in options trading? Hi Mike, I see Ronald, good morning, and hi Ronald joining from Malaysia. This is awesome. By the way, this session is really useful even for those who are new to options trading. So you may just share live, on your Facebook page or your Facebook profile or feed wherever you are. So you might be helping someone, you don't know, someone who might be dabbling into options trading, but they are not able to figure out what is causing them, to lose some money, or why they are not able to make money consistently. So spread the message, let them know, and they would also, if they are able to join in, it's a short, sweet 30 to 45 minute session, they will be able to pick up few good insights that might help in their options trading. So let's go ahead. What I'm going to share with you is like a formula in this, okay? So from a formula perspective, what are the key things you need to make money in options trading? The very first, the number one, the single biggest mistake that I see most of the options traders make, especially those who are new, is that they don't behave like an option trader. There is a very famous saying, it's called, when in Rome, do as the Romans do. What does that mean? How does that affect and how does that apply for options trading? Let's talk about this. As I briefly mentioned, the single biggest mistake new traders or beginners make it is that they don't trade option as options. So what does that mean? Let me also talk about that in a minute. You see, when you are buying stocks, usually you've heard this term which says buy low, sell high, and you are in this for long run. Long run may be 1 month, 3 months, 6 months, 1 year, 5 years, 10 years, and so on. And typically, the first action new traders take is something similar to stocks, which is they will buy the stock and they will hold it for long run. This doesn't work in options trading, and which is why you got to trade it quite differently. Why is that the case? You see, when you are an option trader, options have time decays, meaning it's a decaying asset, meaning it's losing its value as the time is passing by. We'll not go into the formula how option prices are calculated, but if you are interested, feel free to let us know. We'll be happy to share with you the formula as well on how option prices are calculated. But one of the most critical point in option formulation or option price formulation is the time value. And the time value goes to zero as the option expires. So, have you been to a grocery store? If you go to a nearby grocery store, like if you are in Singapore like me, probably you go to NTUC or cold storage, or if you are in maybe US, you go to Walmart or etc. And then you look at the milk carton, right? And then milk carton has an expiration date. Then you go behind, you see another expiration date, and then you see another expiration date. So basically these milk cartons have certain expiration, and on the expiration, thereafter expiration, that milk has actually no value because nobody's going to buy it. So the same thing happens with option, and what I have on my screen right now is an option time decay chart. If you look at it on the horizontal axis is let's say, okay, we just gotta go and bear with me a little bit, it's fine. If you look at here, you'll find that we have 120 days and this is 0 days to expiration, right? So if there was, let's say, $5 of time value, 120 days before expiration, this will become 0. So if you apply that concept of being in a stock trader, that you buy an option and you hold it for long run, your option value will become 0. You may be right in the long run. The stock may still go up, but the option that you chose and the time value you chose will go down to 0 on the expiration day, which is why you cannot behave like a stock trader or investor when you are trading options, and you got to have a different mindset, completely different mindset. And that is the step number 1 that you got to think about when you are trading options, to trade it as an option trader. And you need to understand those basics around how options behave, how options are priced, and how options will behave when I go from 1 week to the next week to the next week into next week. Sometimes people buy a very long-term option thinking that the stock will go up, like it's called leaps. But what if the stock does not go up? Remember, it's a decaying asset. Every day your asset is losing value. Now, once we do understand and we act like an option trader, the next point really is what's next? What is the second thing that needs to happen if you want to be a great option trader? Well, the second thing is you got to know where you are going, or else any road will take you there. You need to decide whether you are a bullish trader, is your directional bullish, or is it a bearish direction? Or you do not expect any major market move. So maybe you will be collecting value from the dividends. That stocks that you purchase, they keep on giving you dividend and you generate the cash flow. You see, in order to make money in options, there are 2 ways or 2 approaches. One is either your cash flow that you are generating via dividends from the stocks. In case of options, it may be via selling. And the second is that capital appreciation, meaning you buy low and you sell high. So for that, you need to be correct on direction. And that's what it means, that either you are bullish or you are bearish, or you're just expecting a sideways move. But you got to have a directional view. Even if that directional view is market neutral, so be it, but it needs to have a directional market view. But I'll give you some more bonus. Do you think there are more than 3 scenarios? What do you think? Are there more scenarios than just 3, bullish, bearish, and sideways? Could there be a 4th scenario or a 5th scenario? Tell me in the comments. What do you think could be another scenario for it? So I look at golden nugget. Options behave differently. Option traders behave differently. Options behave. You are absolutely spot on, Isha. That is perfectly correct. And if you're looking at directional moves, directional framework, or directional scenarios, could there be any other directional scenario? Yeah, it could be highly volatile. That's true. Meaning up and then down. But the fact is, if it goes up, your option will be making money, isn't it? If you are bullish, if you purchase the call. Similarly, the stock goes down, and if you are bearish, your option will be making money. So even during that volatility, it will give you a chance to book your profits, right? But I'm referring to the directional scenario. Could there be any other directional scenario besides this? So Derek mentioned that, neutral strategies. Yeah, but the neutral strategies, Derek, will be covered under sideways market. Any other scenarios that can be created that you think might be applicable in this case? Let me share with you 2 more bonus scenarios. And those are, number 1, what if you are bullish, but if the stock drops and you are still profitable? That sounds kind of confusing. No, it's not actually confusing. If you really think about it, you can be bullish even if the stock drops, but it should not drop a lot. That's what is more interesting, correct? Let me give you a scenario. For example, Let's say you were purchasing Apple, and let's say Apple is $130 stock, and you are bullish. So bullish means that as long as the stock goes up, you will make money. But there are option strategies that you can employ which will still make money even if it is above a certain level. Those strategies may be, the credit spreads that you can use. Maybe, for example, you sell 120 and you buy 110 puts, and this will create a strategy. So what do we mean by that is that you can employ multiple strategies to benefit even if the stock drops a little bit, as long as it doesn't drop too much. Similarly, there is another scenario for the bearish side, which means that even if the stock goes up, you can still make money, but it should not go up a lot, so that it remains within the range and your strategies can work. So it's exactly the same way like we created something on the bullish side, you can create exactly the same thing on the bearish side. It may be a bear call spread, or it's called call credit spreads as well. You can create multiple different type of strategies, but the point here is that even though it rallies, it should not rally a lot. So if you take an example of the bearish side, let's say Apple is 130, you purchase the put, and you expect it to make money if it drops below 130. But let's say if it does go up to 135, so maybe you sold 140 and you purchased 150, and this combination, as long as the stock remains below 140, will still produce you profit. So you see, as an option trader, you have multiple ways to trade, but you got to think like an option trader. You can't think like a stock trader in order for it to happen. And you can only create those strategies or those tools or techniques if you really think with a hat of option trader on your head. Okay, so the first thing and the foremost thing is you got to think and act like an option trader. You are not a stock trader. You are not a value investor. You are not in this for a very, 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 very long run, because options are a decaying asset. And the second most important thing really is that you got to be clear on direction. You got to decide what sort of market outlook you are having. Are you enjoying it, by the way, so far? If you're enjoying it so far, write in the chat box. I'm really, really grounding it to the roots which are important to be a successful option trader in the long run. And those things are around rewiring your mindset. Time and time again, that needs to be enforced, that needs to be reinforced, that you need to act and behave like an option trader. If you're enjoying it, make sure that you are liking the Facebook page. Make sure you're liking the YouTube link as well. Subscribe to the YouTube videos as well. We will be spending more and more time to show you these things, to reach out to you via multiple sources. So help us with that. Hit the like button, hit the love button, or connect to the subscribe. My team or someone from my team will send you a link in the chats that here is the YouTube channel video. Just connect with that. Share with other people so you can benefit and enjoy as well. Okay? So we talked about the thinking, the mindset. Second, we talk about direction. Now let me tell you the third and probably the most important thing when you are trading options. That thing goes into something what I call time. You have to do it according to the duration. You need to choose your strategies, your explorations in such a way that you can still be within the time frame of your option exploration. So what does that mean? It simply means time is money. When you are trading options, you may, for example, you may be bullish. Great, you are bullish, but you hold an option which is expiring at a certain date, and if by the time the stock doesn't really turn bullish, you will lose all the investment you did in that option. And once your option expires worthless, the stock might take off. So in the long run, yes, you are right, the stock actually went up, but it did not go up while you were holding options. Now, how many of you faced it? Tell me. I mean, I've gone through this a couple of times already, that I've been holding option and the stock doesn't go according to my options direction. My option expire worthless, and boom, the next week the stock goes into the direction I was holding on. Anybody experienced that? If you did, mention that right in the chat box. I want to see if I'm alone or if anybody else also experienced it. That in the long run, yeah, you're holding on to option, but it does not work out the way you wanted it to be, right? You did that? Yeah. So your option expiration. So how do you think about the option expiration? That is the critical point. The way you think about option expiration is it is based upon the system you are trading. Now, if you are a value investor, for example, then you are a value investor. You are in it for a long run. So if you are selling puts, you have shown your desire to purchase stocks at that price. If you are a covered call writer, you have shown your intent that you are willing to hold on to that asset for whatever duration you are selling your calls on. Similarly, if you are buying a call option, you must be buying based on certain trading systems, isn't it? You wouldn't just one fine morning wake up and say, hey, I think Peloton is going up, so I'll just simply buy a call option. By the way, Peloton reminds me that they just announced earnings last night based up after the market close, and it seems like that they have a good set of numbers, and currently Peloton is like almost 50% of what it used to be, or what was the all-time high. An all-time high was, of course, during the COVID-19 pandemic crisis. Now they have built a subscription base, they have built a community. It might work out in future as well. So you got to be doing your analysis if you want to hold on to that particular stock. Yeah, are you enjoying it? Loving it? Yes, absolutely. Write that in the comments. Just keep writing, keep sharing if you are enjoying it. Okay, so how do you think about the timing? As I mentioned, timing, you look at your trading system, and based upon that you choose it. We will not go into all other tools and techniques, like you got to have a trading plan, you got to have a stop loss, you got to have capital allocation, etc. Those are afterwards. Those are the tools which you can use once you are into the trade, or once you are planning to the trade. These are your foundation. This is your building block, because if you do not think like an option trader, then you are actually going to be losing money just because it's decaying, and you don't even know why are you losing money, even though the stock is going up 10 cents, 15 cents, 20 cents every day, but your option keep on losing money. And this is the reason, because it keeps decaying. Similarly, you got to be clear about the timing. So if you were to put all of this together, what are the key things you need in order to be a successful option trader? Before you could even begin your journey, here are the 3 things you need to have in your arsenal, in your toolbox. Number 1, you got to be thinking and trading as an option trader. Second, you need to be clear about the direction that you are trading. Now that direction may be bullish, bearish, or sideways, or mildly bullish or mildly bearish, but you got to be clear about the direction. And the third is about the timing. You need to be clear, back test it, look at it and see in how many days you can see the results coming up according to the trading system you have chosen, and then choose the option expiration accordingly. So if you keep those 3 things in mind, you would be able to make the most of trading options. 3 solid things. Remember, step 1, thinking and acting like an option trader. Number 2, being clear about the direction that you are trading, whether it's up, down, or sideways. Third, being absolutely clear about time to expiration, time that your trading system perform. So look at that proper timings, okay? And then you go into your trading of individual trading systems and so on. So with all that, these were the key things that I wanted to very quickly reinforce to you as an option trader. Now I will go into some of the questions that you may have about options trading, about how do you become, or how do you handle these challenges. I'll be more than happy to take those questions. And if you have any other comments, anything you would like to know, mention into the chat box, and I'm reading your comments now. I'll be more than happy to answer that. Make sure you hit the like button. Make sure you subscribe to the Facebook. Make sure you like our Facebook page so we can reach out to you. We don't want to keep sending you the emails because the emails these days sometimes may be difficult to not reach in the inbox. So make sure that you are connected with us with the proper social media tools as well. Okay, so now I'm going to take some questions. I hope you write down those 3 golden nuggets. Make sure you stick onto the computer. Make sure you write on the desktop, whatever you are using. These are the 3 things I need to keep in mind when I'm trading options. Okay, let's see what are the questions you have and we'll go through that. So a question is from Jyoti from Bangkok. So we should buy after earnings announcements once the price goes down. Well, Jyoti, that depends on the trading system you are using. So for example, like PayPal yesterday, they announced earnings, but after earnings, it actually went up, then it went down, and then again, it started to go up. So you may choose, your technical systems, fundamental systems to link it, and then you can trade it. And then you need to think about in how many months and weeks you think the stock will actually turn around. And if you think that will turn around within the time frame of say 3 months, then you choose your time to expiration as 3 months. If you think it will take it 6 months, then you need to factor in that as well. Very good. And hope, Jyoti, if you like it, mention that. Yes, I got that. Okay, so I'm going to read that comments as well. Once again, right where you're joining from, it's really, really fun to see, and I'm so excited to see you. Another one I see from Jackie. Hi Manoj, Sifu, thank you. What is the best duration of an options for a credit spread trade? Well, Jackie, it all depends on the trading system you are using. If you are not clear what trading system you're using, I would suggest that you should have at least 30 to 45 days to expiration. That gives you some time, that gives you that gives enough time for your system to perform. Okay, wonderful. Next question is from Karthik. Why is that can I just see that Karthik's comments? Why is that when an option is bought or sold, usually we start off with a negative P&L? Well, Karthik, it also depends on whether you purchased it a mid price or you did this on natural price. We can cover that in some other time. But if you sold less than the natural price, which means that you have an immediate loss. If you bought it for more than the natural price, then you actually paid more and you will have an immediate loss. Those are usually the key reasons why you might see an immediate loss. Okay, next question. MasterCard prices went down when we were anticipating increase in the price. What should we do? Well, those are around the repairs. You need to see first, go back to the basics, which are 3 basics: time, direction, and acting as an option trader. So if master prices go down and you were actually bullish, so has your outlook changed? Have you turned bearish from bullish? If you've turned bearish, then you have multiple choices. You can convert your option trade into bearish trade. Let's go ahead, keep hitting, keep writing the questions that you might have. Very good, let's just keep going and let me know. How many of you actually agree to this? Direction, time, and mindset are going to be the real key thing for you to make that success. So the question is from Stephen. When selling puts, does it make sense to sell further out DTE, for example, 90 to 100 days? Well, if you are selling a put option, what is your intent behind it? Are you expecting the stock to go up so you can make money from credit spread or from selling put? Or are you expecting the stock to be a sign? So if you're expecting the stock to be a sign, then I would say at least, kind of 30 days may be a good choice to look at. But if you're looking for a short spike or a swing kind of trade, then there are better alternatives than just to sell puts. Okay, next question is from Ivan Sim. If I'm doing a CSP start and happy to own the underlying, should I wait for a green day to earn more on the option premium or just keep selling? Well, Ivan, you've got to decide you are selling it for what. If you are selling a put, you actually want to see a red day. You know why? Because you can collect more credit, IVs will go up, stock price will be lower, you will be able to select, you will be able to get more credit. Kind of different, right? Versus what you were thinking. So once again, it goes back to the mindset that if you are an option trader, think in terms of option trading, think in terms of option Greeks, and see how those interact based on the price actions. Fantastic. Let's keep going. I see from Jackie again, is it wise not to do any credit spreads right before an earning announcement? Well, Jackie, earning announcements are quite volatile, isn't it? There's a 50% chance it may go up, 50% chance it may go down. So if you are willing to take this kind of probability, you can open a bull put spread or a put credit spread or a bear call credit spread before the earning announcements. You will benefit from heightened implied volatility and you will collect more credit. But then be prepared for the corresponding risk as well. We see another one from Kamal. If we have stock, should we sell covered call and take premiums, or we buy put or cover down the side? I think, Kamal, I'm not very clear on your question, but if your question is that if you have stock, should you sell the calls against it? Yeah, why not? Keep generating your own dividends. Make sure that you are happy to let your shares go if your shares are called away. I see Irene. Hi Manoj, do you see buying long call as strategy as time decay is slower? Yeah, I see. Why not? Buying call is a good strategy if you think the stock will go up within the time frame you're holding the stocks. So let's say, as an example will be that, by the way, this is not a recommendation. So you got to do your due diligence to make sure if you want to follow that and etc. So I'm not making a recommendation. I will just share with you what I believe in. So for example, Shopify currently dropped to almost, say, 200-day moving average, and I think Shopify can run around because it has already dropped $300 to $400 since its high. So I might decide to buy a call option on Shopify for about 3 months. Maybe in 3 months' time, Shopify will turn around and will produce me more profit than I'm investing in that. So that becomes a good call strategy. So you have to really evaluate multiple dimensions before you choose the type of strategy for your trading system. Now, many of you are asking questions about earnings, right? So I do have a fantastic program, and this program I'm gifting as a bonus. So the program is $2,000 worth, but we conducted 3 days training. We have documented, we want to give it to you for free for those who are on FB Live. Here is what you need to do. My team will be putting a link in the chat box. Click on the link and then just refer 2 friends. And when you refer 2 friends, they also get it for free. It's a quality, fantastic program. Most of your questions around earnings have been answered that. In fact, I also share the charts, I share the indicators, I share how you can profit from earnings, and your access will be there for about 8 weeks free of cost. There is nothing for you to pay. All you need to do is just refer 2 of your friends who might be interested in option trading, and they will also get it for free, completely free. My team has just posted a link. If you don't have access to it, you can simply just go ahead and join that link for free, join that program for free. It's a 3-day program, bootcamp, online, divided into multiple modules and sections. You can watch it anywhere, anytime you like it. Just simply go ahead. As of now, it's free, but because this FB Live is also being recorded, and if you happen to watch it after several months, it may not be available for free. Let me take some other questions as well. Can guide how to set up stop loss, limit stop loss. Well, this is not really focusing on the stop loss. I think I talked briefly about that in the previous FB Live. So I suggest that you watch the previous week's FB Live, or just watch out on the FB page of OptionPundit, and you will be able to see some of the stop loss criteria we discussed previously. If you do have some questions or maybe some topics that you would like us to cover in these FB Live or YouTube Live, make sure that you write in the comments. We will be picking up maybe best or the most in demand topics, and we will cover that in YouTube Live or FB Live. By the way, if you are not a YouTube subscriber for OptionPundit channel, you're going to miss out. I suggest that you sign up for the YouTube subscription as well. We are attaching that. Once again, everything that I'm doing here and I'm sharing with you on FB Live or YouTube Live, it's all free. Okay, let's go ahead and see some more questions. We still have a couple of more minutes to go. We are keeping within the schedule, as we promised to you, to just keep it within 30 to 40 minutes so you can join on the lunchtime from anywhere. And if you are enjoying this, if you're liking it, please write in the comments. Say, do this more, do it more often, Manoj, or do it more often, OptionPundit. Just write that, do it more often, OptionPundit. Hashtag OptionPundit. Do it more, OptionPundit. Hashtag. Do it more, hashtag OptionPundit. I love to read your comments, and many of the questions, like let's say if it is not answered, we'll try to see if we can answer you later on. Next question is from Jerome. I hold shares of Tesla at $750, but it seems like its stock going nowhere. What is your opinion on Tesla? Now, Jerome, I'm not going to make any opinion statement about individual stocks, especially in the FB Lives. But if I were in Tesla, from my own opinion perspective, from my own money perspective, I mentioned in Telegram about, I think 2 months ago or so, that 880 plus minus 5%, 830, 850 plus minus 3-5% will be the short-term high. So you can check it out on our Telegram group as well. So I'm not bullish unless it really crosses the price that I mentioned there. Yeah, Irene, thank you. Do it more, OptionPundit. I like that. Karthik, do it more, hashtag OptionPundit. Do it more, because that gives my team enough incentives, and be happy to share these things with you and do it more often. Next question is from Sharon. It says, can you conduct a session on how to trade in bear market? Yes, Sharon, we'll talk about that. Leave those things into the comments. My team will pick up 2 or 3 best topics from it, and we might do an FB Live totally focused on that. Yeah, right in this. So next is from Eunice Anthony. By the way, if I don't pronounce your names correctly, please excuse me, because my English is kind of funny. English is not my first language. I will try my best to speak and pronounce correctly, but if it's not, this is my apologies. Yeah. So write it, do it more often, OptionPundit hashtag. This is great, awesome. So we are coming to the close. 30 minutes, we talked about 12:30 to 1 Singapore time, and 12:30 p.m. or rather a.m. to 1 US Eastern time. And it's right on my time. And I hope you enjoy this short, sweet, crisp session to reinforce you what are the things required to be a good option trader. 3 basic principles you need to keep in mind. Don't forget, it's about the mindset, it's about the time, and it's about the direction. And then you follow your trading plans and system. With all that, in the moment, for the moment, this is Manoj. Please stay safe, stay healthy, and take care of yourself very well. I look forward to seeing you in the next episode. Cheers.